Waiting for it to go live. Good morning, afternoon. Actually, I'm going to change that to good day. And welcome to Showcase Broadcast Studios. Especially I say good day because of today's topic and our featured guest, Dave Pierce with GPS Capital Markets. Thank you for joining, Dave.
Thanks, Michael. Appreciate it.
Absolutely. I'm so
Good to
excited.
be here.
I feel like I'm in the presence of a celebrity. You have been on CNBC. You've been quoted in Wall Street Journal, Bloomberg News. It's kind of cool. You're almost like the Matt Damon of foreign exchange.
I don't think so, but he's not nearly as old as me, and he probably makes more money as well.
Fair enough. Fair enough. So I'm glad that you're joining us today. And this is the first broadcast that I've done in, I think it's been about 8 months. So I'm very happy to be broadcasting again and doing these live broadcasts and bringing insight and knowledge to the world through the different specialists like Dave in different industries, different expertise. So this is very exciting. If you do have questions and you're watching this live, definitely throw it into the chat section. We'll try and get to those questions. If we don't, I apologize. We'll get back to you with those answers and any questions you have. But just as an introduction, Dave, you've been involved with foreign exchange and currency exchange for 30 years, is it?
Yeah, a little more than that, but yeah,
we'll keep it at 30 years.
Let's do that because it makes me sound young.
Perfect. And I know GPS Capital Markets deals globally in exchange brokerage. You're an exchange brokerage firm, helping companies worldwide with foreign exchange risk. Is that fair?
That is correct. That is correct. Yeah, we've got offices, throughout Europe and the Americas, in Asia. So yeah, we've been doing this. We've been in business for about a little more than 20 years. And we have clients all over the globe.
That's great. That's great. Okay, so I do have my own questions to ask, but is the whole concept, and I know this has always been a conversation piece, obviously for 20 plus years, because that's how long the business has been around. But the idea, the concern of foreign exchange and a risk, has that been more of a concern now than ever before? Are we at that upcycle? What's going on that are people talking about it more?
Yeah, great question, Michael. It has been an interesting time. Over the years that I've been in it, there's been times with huge volatility in the marketplace where it has really impacted companies. And then there's been years that it has been pretty quiet. A few years ago, before Brexit happened, it was boring and there was not a lot going on. And a lot of people, I think, that were new to the world were coming in and like, why do we even need to worry about this? Because it's kind of a non-issue. Currencies are moving 3% or 5% a year. That just doesn't impact us at all. But if we look over the last 6 months and you see some currencies moving, 10, 20, 30, 40%, all of a sudden it becomes really a big deal. And it has made some significant impactful differences in how companies react, how they do business, their profitabilities. So it kind of goes in waves like everything else in the economy. The economy is not always strong. Inflation is not always high. Interest rates aren't always high or low. And currency markets are kind of the same way. It's just another aspect that you have to manage in your business to make sure that you're doing well, that you're being successful, that you're not losing money on this, and then take advantage of opportunities in times like this, where in some ways it could be really challenging for business, but there's also some really good opportunities out there.
I want to take a step back.
Okay.
Speaking as a novice.
All right.
And someone that doesn't really understand the whole concept. Help me understand what exactly is the concern in foreign exchange, currency risk. Walk me through an example. just to, and
Sure.
this will absolutely help some of the individuals that are starting up businesses, have been in business, and are now dealing internationally and globally. What does all this mean?
Yeah. And I will put this in a couple of different terms. So, first example I'm going to say is you are a US exporter and you
Mhm.
sell your product around the world. And that's what you do. You just make your product here, you sell it in other countries. All of a sudden, because the US dollar strengthens so much, your product's now more expensive. So for US manufacturers, this has not been the greatest thing to have a really strong dollar because it's making everything more expensive. They're less competitive. You might
Okay.
have a US multinational that has offices overseas. And let's say that your office in Germany made 10 million euros in profit this year. And normally when you bring that back, that equates to maybe 11 million US dollars. Instead of that, it's only worth 10 million US dollars. So the amount of money you're getting back from your overseas entities can be less. Now, the same time, if you're a US importer and buying product overseas, everything's on sale because the US dollar is so strong. So there's a lot of different aspects of this depending on where you're at in the business cycle.
So, okay, we're so I have a business here in the States,
Yep.
and I'm selling overseas. U.S. dollar strong, not good for me.
Not so
U.S.
good.
dollar's weak, it is good for me.
Yes. Well, your product's going to be cheaper. So,
Okay,
yeah,
okay. So right now we have a strong U.S. dollar. Is that right?
really strong. Yeah. It's 15-20% stronger than it was beginning of the year.
That's incredible.
Yeah.
What? How or why? Why is it?
Well,
I wasn't sure which question to start with.
how and why are probably the best question you could ask because it's a little bit of both how and why. Because, and I'm just going to put this in really simple terms because if you think about the law of supply and demand, that's how I kind of like to look at things.
Mhm.
If there's a lot of demand for one thing, then the price goes up, right? If there's a lot of supply of something and no demand, the price for that commodity or whatever it is goes down.
Mhm.
So why is the US dollar strong? A couple of reasons. We've had amazing, unprecedented hikes in interest rates
Mhm.
this year, especially over the last 3 or 4 months. Well, capital is smart and capital follows returns. So if returns are higher in the United States, just because people are they can get more interest in an account, capital is going to flow that direction. So
Okay.
you've got, if you got in Europe and you're at like a zero interest rate environment in the EU, and all of a sudden, interest rates are, it's called 4% in the US, you can get a higher return on your funds here in the US. And so money tends to follow where higher interest rates are. So there's been a lot of money
Okay.
come into the US because of that. Secondly, we can thank Vladimir Putin for invading Ukraine because when there is war, uncertainty, things like that going on in the world, money tends to flee towards safety. And the US is the biggest safe haven currency that there is out there. So a lot of people just want their money outside of, Europe or somewhere else that is safer for them to hold funds. So those are the really two main factors that have driven this. One is an economic fundamental factor that has just been in place, that is basically driven by the U.S. Fed, and other is an external factor, which is, the war that's going on, the conflict in Ukraine, and the resulting effects of that.
What do you mean by that?
Well, just because of what's going on in Ukraine. I mean, think about it. The demand for the price of oil, we all know it's gone way up, right?
Mhm.
Because Russia has been limiting their supply, or Europeans are not buying as much oil from Russia. So when the price of oil goes up, price of oil worldwide is priced in US dollars. So if the price
Okay.
of oil, instead of being $50 a barrel, is $100 a barrel, there's more people buying dollars. They're buying more dollars in order to pay for their oil, right? So
Right.
and this all kind of works together. You've got people fleeing money fleeing riskier areas, more Eastern Europe. So they're putting it in the US as more of a safe haven. And then you've also got the impacts of the war on the price of oil, which also creates demand for the US dollar.
Okay. Okay.
I know it's like this big mesh of everything that, kind of comes together and works together to cause this. So it's really been a confluence of two different events. And there's more things obviously go on, but it's those two main events is what's been driving most of this.
Well, and I'm just thinking about I don't want to say average manufacturer, but the mid-size, small to mid-size manufacturer that has products that are shipping all over the world. Do they ever think about this? And I know GPS spends a lot of time with CPA firms and their clients in helping them. But if they're not connected with you guys, they haven't heard of you, what are they doing? Is there anything that they could or should do to protect themselves, or even in the future to project out?
Absolutely. And it's interesting because it really depends on the company. Some companies are just really on top of it and do a really good job. And I would tell you that 30 years ago, when I'd go out and talk to companies about this, their whole mantra was bury their head in the sand. It's like, if somebody wants to buy my product, they can pay for it in US dollars, and I don't care. Mm-hmm. Now I think we have a much better understanding. This is a global market that we live in, and we cannot survive without doing business. I mean, if you're a local dry cleaner, really nothing it's not going to really impact you, right? But if you are a manufacturing firm and you're selling something globally, it really does impact what you're doing. It is managing your foreign currency risk is really quite simple. And there are literally hundreds of products, depending on what your situation is, that we can help you basically just lock in an exchange rate. If you know that you're going to have X amount of sales over the next year, we can lock in your rate today so you know exactly how much that's going to be in US dollars once you get your funds back. It's a simple process, but it can be overwhelming to so many people at the beginning because the terms are different and understanding all the complexities of it. And that's our job, is to help you make things like that simple. We want to make it so that it is easy to do, and it's not something that people have to spend all of their brain capital on. Yeah. So we try to help. That we're consultants, and that's what we do. Is we help people try and we help them manage their currency exposures better.
When does it make sense for a business to be concerned? At what, I don't know if it's like, I would say it's probably more at the dollar level versus the lifeline level.
Well, I'll be honest with you, small mom and pop shops seem to be way more concerned about it than companies that have $200 and $300 billion in sales. And really? Once you get to be $1 billion, well, because it's money in their pocket, right? If you've got a 3, 4, 5, 10 person company, every dollar matters to them. Mm-hmm. And they tend to spend a lot more time on it than someone that is, it's a publicly held company that's $200 to $500 million in sales, that it's not the person who's managing that's actual money, it's somebody else's money. So it's more theoretical. So I would say that the spot where we see customers probably not managing it as best is somewhere in that 200 million in sales to 500 million in sales range. That's kind of seems to be a spot where there's not as much expertise involved in that. And that tends to be where we do a lot of business.
Okay. So I have heard a little bit about something like currency headwinds.
Currency headwinds, yeah.
I didn't know what that was. So I don't need to know it. I just know who to ask. But since we're talking, what is that?
Well,
I feel like a little kid is like, what is that?
Yeah, if you turn on CNBC today or anytime in the last few months, you're going to see CEOs or CFOs of companies up there saying that, well, we didn't perform quite as well as we did because of currency headwinds. And everybody's like, oh, yeah, well, I get, yeah, sure, that sounds great. But what is that? Currency headwinds is just a buzzword that has come up for people that are trying to explain why it's not their fault. And so really what happens is you've got cells overseas and you're making a bunch of money. And by the time you bring the funds back, the currency's moved against you. Well, if you have a good hedging program in place, that doesn't matter because you've got it already locked in. A lot of these, and it's amazing how many massive companies don't do this. But if you had your currency hedging program and it was in place and it was done right, currency headwinds would not be an issue for your company.
I'm just thinking about parents with little kids, and if they were to hear this, they break something, they would say, "It's not my fault, it's currency headwind."
Yeah, exactly.
That's how you know that they're going to be successful in business.
The CEOs love to throw that out. It wasn't my fault. The company's not performing. It was currency headwinds. Nothing I could do about it.
That is incredible. I love that. I love that term. I'm going to use that now.
Yeah.
It's going to get me out of a lot of problems when I do something stupid at home.
It was toy headwinds that caused the problem, not me. Yeah.
So with the volatility, I think it's fair to say that there's volatility.
Yeah, lots of it.
Currency. Okay, so how is that impact? I'm sure you guys look at this, but how do you guys project what that impact is going to be for businesses? And you mentioned about building a plan to hedge against this for the next year or two. What happens if you hedge and then it goes the other way? I'm asking a lot of generic questions because I'm not quite sure.
Sure.
How do you protect yourself on either side?
Yeah, and it really, Michael, it really depends a lot on what type of exposure you've got and where the company is at and what they're trying to accomplish. So let me explain that. If you have got an order from a company, you know that you're going to get paid and you're going to get paid 6 months from now after you've completed manufacturing and shipping the product, and you know you're going to get the money, you should have that locked in today. And you don't care if the rate goes up or down because you're still going to get, let's call it $1 million. You're still going to receive that $1 million, and that's what you expected to receive, and your margins are not going to be impacted by that. Now, if you know that next year I'm going to sell $10 million worth of product into Europe, but it could be 15, it could be 5, depending on what happens in the marketplace, that's where you want to use a little bit different type of hedging tool, one that has some optionality to it, where you protect yourself from the downside, but maybe even allowing yourself to have upside. And I like to use the example of insurance, right? You don't buy fire insurance because you plan on burning down your house. You buy fire insurance in case something tragic happens and your house burns down. It's not because you think the house is going to burn down. It's because you're trying to prevent it from burning down. And that's kind of what you need to look at when you're looking at hedging this, especially for the longer term. It's not about planning to have the house burn down. It's what do we do if it does?
This is the same.
Yeah, it's just like any kind of business insurance or anything. You're protecting against downside, right?
Yeah, that makes sense. And I know it's complicated. Clearly, it's very complicated. And I know you guys are a huge resource for a number of firms that we work with here at Source Advisors,
right?
As well as outside of that. I want to wrap this up. Thank you again for joining us. Any parting thoughts? Like, what do you suggest if somebody is not thinking about this, but who usually within a business, who is usually concerned about this?
Yeah, CEO, CFO. Those are the main people, shareholders. But one of the things I want to point out, because this was kind of the title, we haven't even got there yet, but opportunities that might exist right now.
Okay,
right now,
we need to get into that. I'm sorry.
If you're a U.S. company, international companies are on sale right now. I mean, just think about it. If you can buy a company in Europe for, let's call it 15 or 20% less than you could a year ago, and you can go to the EU and you can borrow money at almost 0% and get a 20% discount, that's a great bargain. So if you're a U.S. company and you're looking to expand globally, finding businesses that might even be struggling because their economies are not doing as well as ours. Yeah, their economies are depressed, which means the prices of the company might be depressed. The dollar has given you a 15 or 20% gain, and you can borrow for almost nothing over there. I mean, isn't that what we're all looking for, is opportunities? And right now is not the time to sit around and be shy and not want to expand. If you're a US company, expanding globally right now is a great time to do it, because you can really pick up some bargains. And this is not going to last. This is, things go in cycles, and
Right.
the dollar's going to come back, and it's going to lose some value. And even if I'm not a gambler, I'm not a speculator, but I know when something's on sale. And when something's on sale, the time to buy it is now.
Yeah. Yeah. That's a great point. And I'm glad you brought that up before we concluded, because the dollar is so strong. It makes sense.
Right. We talked about all the negatives, and this is one of the positives,
Sorry.
right? And so, it's always good to leave on a positive note, not just talking about all the stuff that can go wrong, but the opportunities that are out there in the marketplace.
Absolutely. And that's why, bringing in that parting thought of, this is not all bad.
No, it's not.
Good out of this, and good opportunities for U.S. businesses to get out there and grow. And
we heard Chairman Powell talk at the the Sun Valley Summit today, and he basically said interest rates are going to continue to rise because inflation is not under control, and that's his number one goal, is to get inflation under control. And the way he does that is by raising interest rates. So we're not done. This is not over.
That's a bit concerning. I get it.
Especially if you want to go buy a house in the near future, your mortgage is going to be a lot more expensive.
Yep. Yeah, I know. That's very true. All right, Dave, thank you again. So as people are watching this and have questions and concerns, I know they can reach out to you. And I have your email scrolling. How do they get in touch with the group overall? What's the best way?
You know what? You could just email me, and I can connect you with the right person here that can handle your issues. I've kind of like separated myself from the day-to-day things, and I spend most of my time doing things like this with you. And
beautiful.
But I will get you to the right person that can help you with your specific problem in your specific area. So you can just send it to me, and I'll take good care of them.
Perfect.
I'll make sure they get to the right person.
Beautiful. All right. Well, again, Dave, thank you for joining this day. Sorry for that. Again, reach out to Dave. He'll connect you with the right people so that we can definitely get you set up in the right way. I will be posting this on my podcast, so watch for that. And then if you could share this, if you know anyone else that is thinking, wait a minute, we have a concern, or I know somebody that has a concern, take this video. It'll be on LinkedIn. It's recorded on YouTube, and it is recorded on Twitter. Share it with them. Help them out, because that's what we're in the business of doing, is helping each other. So with that, Dave, thank you again.
Thanks, Mike. It's always a pleasure.
We'll talk again soon.
Okay, thanks.
Take care.